we're not that concerned about COVID risks anymore for a number of reasons. I mean, certainly, the evidence is on the side that vaccinations, while apparently they're not 100% safety measures, I have to also say that, but they do help, especially in the severe cases. Now you seem to get also drugs that help to mitigate the severe cases. And therefore, I mean, the governments have all incentive. Right? It is so expensive to lock down, or even partial lockdown, so expensive. You do have a strong incentive to fully open. So yeah, it's not completely out of the way, but I think from a market's point of view, the issue of COVID is slowly but surely moving more and more into the rear mirror.
It is. And so where is it opening new opportunities, Hartmut?
Yeah, what I will also have to say is it doesn't make it necessarily easier, because you already had seen in many economies the positive effects of reopening. So your spikes in terms of growth in many economies, perhaps Europe is an exception because they were a bit late, but in the US, for example, certainly here in Asia, you've already seen the peaks. So as a result, we should also expect that the trajectory of stock markets is not quite as steep anymore, cannot be quite as steep anymore as it has been in many countries. Nonetheless, it remains positive. But what it also means for portfolio managers is to start moving into out of the first part of the cycle where everything jumps, especially early cyclicals. So we still have energy, we still have financials on an overweight, but we recently took industrials, for example, out, so one cyclical less, and instead replaced it with a laggard with healthcare. So we're rounding out the portfolio to a not quite as aggressive stance anymore, but still pro risk.